All right, what it is, what it do, man. We back with another market recap of today's price action, right? So, like I said, we looking at this zone is 9:30 and this zone is 12 o'clock. That's my trading window. That's the time that I look to get into my trades, right? So that's the only time I'm most likely looking to get in a trade. Anything after 12:30, 12 is kind of a it's kind of like a low probability trade for me, right? So anyway, so one thing we want to start with is understanding that we see here at 4 in the morning, it swept out some buy side. You see how it was relative highs right here? This is the reason why I was kind of short on the day, but still wanted longs also because first of all, this is a weekly daily fair value gap, right? So we came up in this weekly daily fair value gap. We left relative highs. So if this never happened and it just displaced lower, I would have been extremely bullish because we have relative highs, which is a triple top, right? So I would have been extremely bullish. But at 4 o'clock, we came up and swept that, right? And then we started displacing and we started actually respecting order flow, right? So now we're coming down, we're coming down, we're coming down. Now, 9:30. So it's something that's called a Judas swing, right? A Judas swing a Judas swing is basically where it's a manipulation to the opposite end, right? So as we see here, 9:30. Let me zoom in a little bit more. So right here, as you see here, 9:30 open right here, 9:30 open right here, and we just displaced lower. So if you focus on order flow, this is what I mean. You want to focus on order flow. He said, I'm gonna hop on YouTube. No, 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 it's not out. It's not out yet. I'm recording it right now to post it on YouTube. You see what I'm saying? So it's not on YouTube yet, but it will be on YouTube by the end of tonight. So you see how we just displaced lower, right? 9:30, right? We displaced lower, boom. Now look what happens. We get a tap into this inefficiency, right? Because remember, it leaves inefficiencies on the way down, right? But to get an entry, you want to wait, right? To get an entry, you want to wait for it to come back, pull back into an inefficiency to get your trade. So we get a pull back to an inefficiency. If you look closely, you see how it stays in the lower half. You see how it stays in the lower half? It stops right here and then displaces lower. That's exactly what you want to see when you're bearish. When you're bearish, that's exactly what you want to see. You want to see inefficiencies stay in the lower half. You don't want to see the inefficiency come up in the upper half because now we're not extremely bearish. I like to trade when we're extremely bearish or when we're extremely bullish. When we're extremely bullish, it's going to stop at the lower half and then displace lower. So this could have been our first entry right here. Now we get displacement lower, and then it just falls. And you see it just falls. It comes back up, falls more. So now we finally get a tap into an area which is a POI, which is a certain area where I'm expecting it to actually, it's basically a point of interest, right? It's just an area where I'm expecting it to do something. So I get into a trade right here. So hold on. Let me put on my executions. All right. How you put on that? I don't know why you're not letting me put the executions on. But anyways, I get into a trade right here because we got the breaker. We have a low, high, lower, low, higher, high. And we're in an area where I'm expecting it to bounce at, to do something at. So right here, we got our strategy right here. But one thing I didn't realize is that guess what? We didn't get a sweep of a higher time frame liquidity, right? We got no sweep. The sweep is down here. So maybe that's why my play didn't really work out to perfection, right? But let me show you how we did bank some money off of it. So we catch the breaker, right? We catch the breaker here. We get the low, high, lower, low, higher, high. My first target, so I get in right here. My first target was this low hanging fruit right here, which is 78 points. And this is why I love the breakers because look at my stop loss. My stop loss is literally right here underneath this down close, underneath this bullish candle right here. So I got, if you go look at my IG, I got real close to getting stopped out, but I didn't get stopped out, right? It came real close, right? Rally, I got out. What's crazy is that I literally got out of my trade like right here. So I banked about 56 points. So that was good because what I realized is for the breakers to really work into run, you see how it came back into this breaker twice, right? You see how it expanded It came back, expanded again, it came back again. From my honestly, from my experience and how I trade the breaker, it's not supposed to do that. It's not supposed to come back into the breaker multiple times like that. Especially, especially the breaker is not supposed to actually come into this lower half. I break when the breakers come to this lower half, it's a low probability immediately. It's a low probability because the breakers, right? Because the breaker is supposed to do this right here. So we got a low, high, lower low, higher high. Right when it comes back into here, it's supposed to expand. Yes, it could come back, but it's supposed to stay in the upper half. If it consolidates, I'm okay with it consolidating here. You see how it's staying in the upper half? But the moment it comes down here, like what it did here, now it becomes kind of like iffy, right? It becomes a little iffy. So the fact that I saw it doing that, I didn't like that because it's supposed to come up here, stop up here, and then rally. Come up, keep rallying. That's not what we were seeing. We saw it keep digging in deeper and deeper. But understanding your stop loss placement, which I had underneath, I stayed in the trade and I did not get stopped out. And we made some money. We caught 58 points on this trade, risking only like 20. But Sonny told me the way how it was moving fishy, it wasn't going to keep running. That's why I got out right here, right below this buy side, right? Then it came back and then it just displaced lower. So it was a good thing. It was a good thing that I got out early. He said, I can only see your face. So I'm on YouTube. So I'm making a video for YouTube right now. I'm making a video for YouTube. So you'll be able to see it on my YouTube channel in like 20 minutes. So, and then that's the trade I caught. And then I caught another wonderful trade. So look at the trade I caught. So now remember I told you about the sweep? Remember I told you about it was no higher time frame sweep. So look, we got the sweep now. So see the sweep? We got the sweep. Now we activated, right? So now we got a sweep in the area. So we got a sweep once. Now I'm looking for the reversal. Now look what happened. First of all, we got a sweep in the area where I'm expecting it. Hold on, let me just turn it for everybody on IG right quick. Shit. All right, right there. So this is the second trade right here, right? So we got a sweep, a higher time frame sweep, which is yesterday's daily. As you see right here, we swept it. Now I'm looking for bullish signatures, right? I'm looking for bullish signatures. So the first thing I'm looking for is now all of these bearish PDA rates. I'm expecting it to get used as an inverse, right? Expecting it to get used as an inverse. So we got a bounce. I'm loving that bounce, right? We rally. So now my first initial thing, I'm looking to see down close candles to get held as support, right? I'm looking for down close candles, which is order blocks, to get held as support. And to anything that's booked to bearish to get used as an inverse. So this is the first inverse that I was looking at. So bam, let's just go over it. We got a bounce, boom. So we get a order block right here. So we got a down close candle and then an order block. Okay, cool. It came down, it rallies up. So now I'm looking for it to use this as an inverse, right? You see it closed up, it closed outside of this inverse. Then it comes, you see how it comes back in? Once you get it close, it comes back in. You see how it's stopping at equilibrium? It keeps stopping at equilibrium, stopping at equilibrium, stopping at equilibrium. So I got into a long right here and I literally put my stop right below. And then we get a rally. So I was expecting it to come up and take this high, right? So we got that. So I caught a nice 100 points on the second trade. So if you look at it, this is what I mean. You want to see down close candle support price higher. Support price higher. This is what I mean. Everybody freaking got off like IG, motherfuckers. So we get the inverse value. We get the order block right here. So now you see how it's coming into this order block? It's expanding. It comes in, expands, leaves the inefficiency. That's exactly what I'm looking at. Then we create a new order block. We touch the inefficiency. We rally. new order block. So you see how these down close candles are supporting price higher. That's exactly what I was looking for. So that's one of the reasons why I got in. So I caught that trade, and then the last trade of the day that I was not supposed to take, but I thought it was higher probability, which is the breaker. Once again, we get a low, we get a low, high, lower low, higher high. So I jump in. So I broke my rules because I was supposed to be done trading for the day already, right? I already took my 3 trades. I was supposed to be done for the day. But because I like what I was looking at, I jumped in and I took a small loss right here. I got in right here, low, high, lower, low, higher, high, right here. This is where I got in at. So this is where I got in at right here. And then I got out too early. So you see, it hit my TP. I was just trying to catch some of this buy side. But because I didn't like the way it was looking and I was a little bit over leveraged, I got out early. I got out when it was like right here. I should have left my stop right here, but I did it. That will happen when you focus on the money. When you focus on the money, you lose track of what's really going on. Because I'm looking at the P&L. And then it ran, and then it just started, and then it just started consolidating, and then the day was closed. So if I was staying to this trade, I would have ended up only taking one loss for the day. So I ended the day winning 2, losing 2, and ended the day being down $4. But I caught this first initial trade that I just spoke to you guys about. This right here on my funded account, and I made about $1,000 on the funded account. So it's okay. So that's my trading recap. Things I could have did better, which was basically just follow my rules. And after the third trade, I should have been done for the day. That's the key with trading. You wanna make sure you actually be patient, disciplined, have a high probability trade, and understanding risk management. Right. So that's the key. Understanding risk management, understanding what you're supposed to be doing, understanding what we're not supposed to be doing. Okay. So appreciate y'all for tuning in, and I'm about to post this on YouTube.